pre-work or preparation. As we are trading with our hard-earned money, we should put in the pre-work before the market opens. Even if you are paper trading, you should still do it, as you need to develop that skill and the habit so that you can move confidently later to trading with real money. We cannot just get up from the bed, open our system, and start taking trades. This is emphasized by several expert professional traders who have shared this insight in their interviews and books. It is a crucial aspect to be consistently profitable. I have seen the impact of this effort in my own trading journey as well. I usually do this pre-work from 8:30 Eastern Time to 9:15 Eastern Time. Then I take a 15-minute break before I get back to chair for the market open at 9:30. As a novice, you may take more time in the beginning of your learning journey and so must start earlier. But as you do this daily, you will start to get a better hang and would be able to reduce the time needed. But irrespective of the time taken, this is a must. We should only get to trade after making the required effort on preparation. A lot of YouTube videos out there just show you how they saw a pattern on a particular ticker and they applied it perfectly to get awesome returns. Most often than not, they have made the video later in complete knowledge of stock movement that has already happened. So, they can easily pick the best example to show. We should ask them, of the thousands of stocks available for trade, how did they know that they were supposed to look at that specific ticker, at that specific date and time, and for that specific strategy? Do not be fooled by those videos, which are only meant to generate views and ads revenue for them. Anyways, I cannot stop anyone from posting what they want, but I can at least give you the right fundamentals so that you can spot a show-off from a genuine, detailed strategy. Let's jump in. Pre-work primarily involves the following: identifying the stocks that you would watch today. Note the probable direction of price movement based on longer time frame. Take a note of the key levels around the price point for these tickers. Stock screening or selection and key levels would vary based on the trading strategy that you use. When we discuss advanced strategies in next section, I will share the specific rules I use to filter stocks for each of those strategies. Just to give you a perspective on screeners, here are some of the preliminary filters that I would often use. These are not enough, as they would still return a lot of tickers. We need to layer these with more specific filters based on the trading strategy. When I discuss the advanced strategies later, I would give the specific filters to be used for that particular approach on top of these initial filters. Average daily volume over 90 days. For day trading in stocks, I would only go for the ones where we have high amount of liquidity. In other words, there should be high volume of shares traded on a regular basis. This is captured by average daily volume. I would only trade in stocks with average daily volume greater than 1 million shares. Stock price. I usually avoid low-price stocks, as they are prone to manipulation. I would only trade stocks with price greater than $15, and usually I prefer stocks with price greater than $30. Float. This represents the total number of shares available for trading. This is calculated by subtracting the closely held shares and restricted stocks from the total outstanding shares. I prefer to trade in stocks with float greater than 50 million shares. Bid-ask spread. I would also prefer to trade in stocks with low bid-ask spreads, or else one may get a lot of spillages. A bid-ask spread is the difference between the highest price that a buyer is willing to pay for an asset and the lowest price that a seller is willing to accept. The spread thus adds to the transaction cost on top of commissions. The spread is a reflection of the liquidity. More liquid stocks would have narrower spreads. It may widen significantly if fewer participants place limit orders to buy a stock, or if fewer sellers place limit orders to sell. As I mentioned previously, you can choose any screener that works for you. The screenshots in this course for screeners have been taken from Trade Ideas. You will need paid upgrades when you are trading based on intraday scanners. and need real-time data and a lot more customizable filters. Even TradingView has a scanner that is fairly comprehensive. If I am trading NASDAQ, NYSE, IRC listed stocks and ETFs, I have an initial list of roughly 8,000 tickers. After these filters discussed above, we are down to 450 tickers. This is still a lot of tickers to look at, so we need to filter it down further. But the next stage of filtration is strategy specific. We will cover those in next section for various strategies. Once you have identified the stocks to watch that day, you can look at the longer-term trend and patterns to know the direction you would trade in for each selected stock. We do not want to get into a trade if it's against the longer-term trend. You can also use this preparation time to mark the key levels, especially based on longer time frames, like daily and weekly. If the price during the day happens to come close to these levels, they can be significant levels of support or resistance. Other key levels like pivot points, previous day close, etc., can be automatically included in your charts. I would also avoid the tickers where the chart is not smooth. By smooth, I mean that the candles are compact and move cleanly without a lot of jerks. I guess I can explain this better with an example. Consider the two daily charts here. The one on the left is what I would avoid trading in. Over some time, you may also develop a list of tickers that usually work well for the strategies you use, provided you are taking notes and keeping track. This is covered in the journaling chapter. Then, you may just input that list in the scanner to scout for your entry or watch criteria. Then, based on your conditions, whether for pre-market prep or for intraday movement, the recommendations will come up only from that list. One more thing before we move ahead. During the preparation phase, it's really useful to place alerts based on predefined plan, so that I don't have to sit it out and can get my coffee. The buzzer will bring me back to my chair when my trigger is in place. For some strategies, we can even put the trade in advance if we are absolutely sure of the entry and exit points. Some experts suggest you place the trades before the market open, and that removes any mental bias or FOMO during the trading hours. Just set the trades and go away.